Good afternoon. Hope everybody's enjoying their summer. We have some housing data in focus this week during kind of an otherwise quieter trading week. So a little shorter update here for this session. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to leave you feeling more empowered after every interaction and hopefully kind of weed out some of the noise with the data week to week and share with you what we're really watching in terms of what's moving the markets. So this week, again, we're really going to focus on housing data. We had housing start. Basically, this is going to be a lot of numbers, but basically we had housing starts come out. 1.32 million was the housing start number, slightly above expectations. We had building permits come out, 1.4 million, again, above expectations slightly. We had existing home sales come out, 3.93 million, which was down from last month and below expectations. Today, we had new home sales come out up slightly, but again, below expectations. And then lastly, I'll mention on Friday, we also had consumer sentiment up slightly. So I went through all that really quickly, but maybe what I will do is try and summarize what all this might mean. Basically, what I would share is that the gist of it is that there seems to be maybe some building. Building is maybe above expectations, but in terms of sales, maybe slightly below expectations. That's kind of the general theme that maybe you could take away from some of the housing data that's come out over the past 7 days or so. Again, you can look into each of these numbers for sure and kind of tell a story in and of itself. But in general, again, I would say building is maybe a little bit better than expected. And again, the actual sales maybe a little bit lower than expected. And I wouldn't say this is entirely the reason. The reality is rates, even though they are higher, are still not, where they have been in the past. But certainly higher rates, I think, continue to weigh on the housing market to a degree. And if we do see Fed rate cuts later this year, as long as the Fed is also signaling that they expect inflation to come down, we might see mortgage rates finally decrease. But keep in mind, mortgage rates are not tied to the Fed's interest rate. So it does not necessarily mean that just because the Fed cuts rates, that mortgage rates will as well. But I think this is what the real estate market has been looking for a long time, is to see if rates come down. Certainly a lot of individual home buyers, waiting for the right opportunity and really staying in home, because it's really hard to get out of a 2.5% or 3% mortgage to go jump into a 7%, right? So we'll continue to keep an eye on that, which also hints at what's coming up next week. So although this week was quiet, next week is anything but. We have jobs week, we have Q2 GDP, we have the Fed and inflation all in 1 week. And so be sure to tune in next Thursday. We'll be covering all of the above, and certainly kind of an action-packed week to kind of share where we stand. In the meantime, I do want to mention briefly, kind of a side question of the week was a little bit about an earnings update. We are in earnings season right now and starting to get some reports from Google and Tesla, for instance, this week. But next week, we also get a lot of the big tech companies reporting as well. So what I'll share is it's still really early, very conflicting between Google and Tesla this week in terms of the earnings updates that were shared. So kind of a mixed bag so far, but if you zoom out a little bit further, overall things seem to be looking pretty strong. That said, again, we do have some of the bigger tech companies reporting next week. So as we get a little further into earnings season, maybe towards mid-August or so, we'll maybe do a quick little update on where we stand as more companies have reported. But I thought it would be helpful just to touch on this briefly, especially during maybe a little bit lighter of a week in terms of data. So have a great upcoming weekend. We'll look forward to seeing you next Thursday at 3, where again, we're really going to break down a lot from jobs to GDP to the Fed and inflation. In the meantime, again, have a great upcoming weekend, and we'll see you next Thursday.